Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at IREN.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Okay, so let's unpack this. When we talk about IREN, what kind of company are we actually looking at here? It's not some speculative tech play.
No, not at all. You're looking at a fundamental utility infrastructure investment. Its whole focus is on, essential services and a really aggressive expansion into renewable energy in Italy.
So it's more of a core holding then.
For stability. Exactly. It's a low volatility, dividend-focused stock. It appeals to you if you're bullish on stability, on income, not the fast money crowd chasing rapid spikes.
And that stability, it's built on a pretty powerful structural advantage, isn't it? A competitive moat.
A huge one.
Yeah.
It really relies on two things. First is vertical integration. But, the more important part is its regulatory monopoly in regional distribution.
So they essentially own the network.
They do. They serve 3.3 million customers, mostly in the very high-density Emilia-Romagna area. Nobody is going to come in and build a parallel network. It's impossible.
And that gives them incredible pricing power, or at least predictability.
Predictability is the key word. To put a number on it, 90% of IREN's 2024 revenue was regulated.
90%. Wow. So that means it's not really subject to, wild market swings.
Precisely. It's linked to inflation. It's stable.
Yeah.
And that stable cash flow is what directly funds their dividend yield, which is currently at 4.1%.
And is that dividend safe?
It's very safe. What's comforting for investors is that it's fully covered by their free cash flow. So that's the real cash left over after they've paid for everything else.
Okay, that gives me a lot of confidence in the thesis. So let's talk about performance. How did they actually do in 2024, given the tricky energy markets?
They showed really consistent resilience and, even some margin expansion. The full year 2024 results came in with an adjusted EBITDA of $1.083 billion.
Which was up from the year before.
Yeah, up a very healthy 4.1% year over year.
What's interesting to me is where that growth is coming from. It's not just the old, stable, regulated business, right?
No, and that's the real story here. The growth engine is shifting. It's coming from their green divisions, specifically renewable energy and waste energy.
I saw a number on that. The renewable energy division, its revenue grew pretty fast.
They grew 11.3% in the fourth quarter alone. That segment has become the fastest growing contributor to their EBITDA. It shows the strategy is working.
And at the same time, they're getting more efficient. The overall EBITDA margin expanded to what, 38%?
38.2% in Q4. And a huge part of that was just running their existing assets better. Their waste energy plants, for example, operated at an average utilization of 94.5%.
So they're squeezing every bit of value out of their existing infrastructure.
That's how you do it. When you run expensive assets that close to full capacity, your margins just, they balloon.
Okay, so if we connect that efficiency to their balance sheet, what's the debt situation look like? Are they managing it well while spending on green projects?
They're managing it very aggressively. Their net debt to EBITDA ratio, which is a key leverage metric, actually improved. It dropped from 3.3x down to 2.9x.
Which is well within their target range.
Well within. For a utility in a heavy investment cycle, staying under 3x is, it's very disciplined.
And you mentioned free cash flow earlier. The numbers there were pretty exceptional.
They were. $412 million for the full year. That's up 18% from the year before.
And that covered everything.
It did. And this is the part investors love. That cash fully covered their dividend payout and the significant capital they're pouring into new solar and wind capacity. They're literally self-funding their own green transition.
That is the best of both worlds. So with that strength, what's their guidance look like for 2025?
They're guiding for consolidated EBITDA between $1.14 and $1.18 billion. You're already seeing analysts like those at Mediobanca raising their estimates. The market is buying into the story.
Okay, this is where it gets really interesting for the next couple of weeks. Let's talk about the immediate future. What are the specific catalysts happening in May and June that could actually move the stock?
The first big one is the Q1 2025 earnings release. That's coming up in late May.
What's the consensus expectation?
Analysts are looking for EBITDA around 265 to 270 million. But, and this is the kicker, there are whisper numbers suggesting a slight upside.
Based on what?
Better than expected solar generation in the Po Valley.
Mm.
Just, favorable weather patterns. If they beat, even by a little, it'd give the stock a nice lift.
And then just a few days after that, they have their investor day on May 22nd. Why is that so important?
because the market is expecting them to unveil a really detailed capital expenditure plan through 2027. We're waiting to see just how aggressive they get with renewables.
What's the target people are watching for?
The whisper target is that they want to increase the renewable mix in their EBITDA up to 30%. If they confirm that, it changes the whole narrative. Iron stops being a slow utility and starts looking like a European green growth leader.
Got it. So a firm plan is bullish. Now, what about the regulatory side? There's a big date in June, right?
June 18th, that's the IREN tariff decision. IREN is the Italian energy regulator.
And their decision is basically law.
It is. The market is expecting a potential positive 3.8% inflation-adjusted tariff increase for their network.
And why is that specific number so critical?
Because it just reinforces that revenue visibility we talked about. It guarantees their core cash flows are inflation-proof for the next few years, which, justifies their valuation and secures that dividend.
Beyond the regulated side, there's some, let's call it speculative, but potentially explosive news on the green front.
Absolutely. So they have an approved $42 million green hydrogen pilot project in Genoa. The big news that could drop in June is a major funding grant from the EU Green Deal.
We're talking about free money, essentially.
Exactly. Grants. Non-repayable. We could be talking about up to $120 million to subsidize that hydrogen project.
That's a huge deal. It will completely change the economics of that investment.
It would boost the net present value significantly. This is a really key event to track where politics and investment meet.
And we've also heard some unconfirmed chatter about partnerships, maybe with Enel.
Yes, there are rumors. Early talks with Enel Green Power on a hydrogen partnership, which would be huge. And maybe even more interesting, a potential project with Enel X on a big 150-megawatt battery storage system.
And even if they're just rumors, they align perfectly with their strategy.
Precisely. It shows where they're heading. They want to be a central player in Italy's energy transition.
So shifting gears a bit, how is the market reading all this? What do the charts and the big institutional players say?
Well, technically, the stock looks very bullish. We just saw a breakout from what's called a 3-month symmetrical triangle. It broke through resistance at 4.95.
Which is a pretty strong signal.
It is, and it confirms a powerful long-term indicator that flashed back in January, a golden cross. That's when the short-term moving average crosses above a long-term one. It signals a shift into a real uptrend.
And is the big money flowing in? What are the institutions doing?
We're seeing significant accumulation. BlackRock's Italian fund upped its stake from 4.2% to 5.8%. Fidelity also added over 2 million shares. When they move in like that, it shows real conviction.
What about the ultimate sign of conviction insider buying?
We saw that too. The CEO and the CFO both bought shares on the open market earlier this year with their own cash. The CEO bought at 4.79 and the CFO at 4.63. That's a massive signal of confidence.
Okay, so before we wrap up, we have to talk about the risks. What's the bear case here?
The primary risk is regulatory lag. IREN, the Italian regulator, can be slow. So those tariff adjustments we talked about might take 6 to 12 months to actually hit the bottom line.
But isn't that delay sort of priced in when you look at how it trades versus its peers?
It is, and that's the mitigation. IREN trades at a discount to peers like Enel or A2A. The market seems to be aware of that complexity.
Okay, what's risk number 2?
Concentration risk. About 55% of the revenue comes from that one region, Emilia-Romagna. So any major regional downturn could hit them harder than a more diversified utility.
But they are growing outside of that region, aren't they?
They are, and that's the counterpoint. EBITDA from their non-regional operations grew 14% last year. So the diversification strategy is working. It's just, it's a slow process.
So to summarize the whole investment thesis, what's the elevator pitch for IREN?
IREN is an efficiently run utility anchored by stable, regulated cash flows. But it's now accelerating its margins and growth through its green divisions. That makes it a high-conviction, low-volatility play for both income from its 4.1% dividend and, ESG-aligned growth.
So for the listener, the near-term catalysts in May and June could provide a nice lift. But the real value here is unlocked over a longer hold, right? Maybe 12 to 24 months as these green projects really come online.
Our final thought for you to focus on is tracking the convergence of the political and the operational. Specifically, watch for that EU Green Deal funding announcement in June. If those grants materialize, it's a huge validation of their strategy and could significantly de-risk their entire green pipeline.
That's a phenomenal breakdown, thank you. Make sure to subscribe and join us again for our next look into the markets.